What's up, everybody? This is Investing Sensei here bringing you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 every single week. So in these videos, I do go over the list that you guys do provide of the companies. I'll actually pull up Seeking Alpha. We'll look at the company, read a little bit about the company profile, look at the performance, and then we'll jump into the dividend scorecard where we will actually pull up the calculator, crunch some numbers, and find out how many shares or how much in total would you have to have invested in this company. And then we'll wrap up the video by looking at the dividend yield, which kind of tells us when the best opportunity is currently or in the past when the company had the best dividend yield. So let's go ahead and get started. So the next one on the list is actually RWT. I am skipping the first one, which actually I believe announced the dividend cut. So I'm waiting for Seeking Alpha to show up or reflect that information. So we'll be covering over RWT. Let's go ahead and jump over to Seeking Alpha. But before I go over this, guys, consider subscribing with that bell notification. We're trying to get to 20,000 subscribers, so definitely help me out as well. Drop a big thumbs up on the video. Definitely costs you nothing and it helps the channel. But it is RWT, the ticker symbol, Redwood Trust Inc. Currently trading about $7.72. If I actually pull up the company profile, we can read a little bit about them. So Redwood Trust Inc., together with its subsidiaries, operates as a specialty finance company in the United States. The company operates through three segments: residential mortgage banking, business purpose mortgage banking, and investment portfolio. The residential mortgage banking segment operates as a mortgage loan conduit that acquires residential loans from third-party originators for subsequent sales, securitization, or transfer to its investment portfolio. This segment also offers derivative financial instruments to manage risk associated with residential loans. You could actually click on more, read a little bit more about them, but we can see that they are in the financial sector industry. They are in the mortgage REITs. Employees is showing up as 298 employees, and they were founded in 1994. You can visit their website by going to www.redwoodtrust.com. Look at their products and investor relations. But if we pull up back here, guys, we can kind of look at the year-to-date performance. They are actually up 10.44% in the green. If we look at the 1 year, they are down 24.68%. Typically, most of the market is down for the past 1 year. But if we look at the 5 years, they are actually down quite a bit, which is 49.61%. If we look here, they were trading around $17, and then they had a big drop in around February of 2020, right around the pandemic, and they started recovering some, but they've been actually going down some. At the 10-year, they're actually down 62.94%, and total since they've been publicly traded, they are down 23.26%. This is a very, very bad investment compared to capital appreciation. Here you would have been down 23.26%. I guess just in general, if you've been invested or you had $100,000 invested in here in this company for 10 years, you would be down about $62,000, almost $63,000 in this investment, not including dividends, but huge disappointment there. So be careful on the type of companies you do invest. If we look at the 52-week range, the 52-week low is actually $5.52. And then the 52-week high is $11.04. It's trading right around this middle around the 52-week range. We can look at the PE. It's actually 0.89. EPS is 0.89, and then PE is 8.69. Dividend rate is 92 cents. Dividend yield is 11.92%, and then market cap is actually an $876.10 million market cap. So very small company, very close to the 1 billion here. But if we look at the dividend scorecard, again, they are in the financial sector. And if we look at the dividend yield here, you'll see that they are having a dividend yield of 11.92%. Annual payout is 92 cents. So for every share you do own, you would get paid 92 cents for every share for the full year. Payout ratio is showing up very ridiculous, over 1,478%. 5-year CAGR here is actually in the negative 3.86%. This could have been potentially that they cut their dividend. Dividend growth is 2 years, and frequency they do pay out is quarterly, which would be about 23 cents every single quarter. Definitely not my type of investment here, guys, but I am covering it for you. Let's go ahead and pull up the calculator, and we can actually crunch some numbers, see how much we actually need to have invested of this company to make $1,000 every single month. So in order for us to make $1,000 every single month, we would need to have $1,000, and then there's actually 12 months in a year, so you'd multiply times 12. So annually we do need to make about $12,000, and then if we do divide the 12,000 by the annual payout, which is 92 cents, this would give us the total number of shares that we do need to have invested in this company, and we would be roughly making about $1,000 a month. So if we actually multiply this total number of shares times the current share price, you would actually get the total amount of money you'd have to have invested, which is about $100,000, almost $101,000 invested in this company. Remember that they have a very poor performance and capital appreciation. But a quick way to calculate this real quick, you could take the 12,000 you need to make annually, divide it by the dividend yield, and this would give you roughly a quick estimate, and you'll see we get roughly around $100,000. Let's go ahead and do the next one, which is $100 every single month. So you could actually take the previous answer divided by 10, and that would give you the answer. But since we do have the calculator, let's go ahead and crunch those numbers. So we want to make $100 every single month. There's 12 months in a year, so we need to make annually $1,200. Again, divided by the annual payout, which is 92 cents. This will give you the total number of shares you have to have invested to achieve this, which is 1,304 shares. You can actually multiply this times the current share price, and this would give you the total amount you'd have to have invested currently, which is roughly around $10,000 in this company, and you'd be roughly making about $100 every single month. Quick way again to calculate this is 1,200, which is what we need to make annually, divided by the dividend yield, which is 11%, almost 12%, and you'll see that we get roughly about $10,000. So let's go ahead and do the last one, which is how much would you have to have invested in this company to make about $100 every single week. This one would be pretty awesome if you could. Obviously I'm not invested in this company, but I'm just saying in general, if you had a great solid company that would be paying you roughly about $100 every single week, like Lockheed Martin or Apple or Microsoft. But let's go ahead and find out. So we want to make $100 every single week. There's 52 weeks in a year, so you'd multiply it times 52. So annually, we do need to make $5,200. That would roughly make us about $100 every single week. And now you divide it by the annual payout, which is 92 cents. This will give us the total number of shares, which is about 5,652 shares. If we multiply the current number of shares times the current share price, which is $7.72, this will give us the total amount that you'd have to have invested in this company, which is about $43,000, almost $44,000 invested in this company, and you would be roughly making about $100 every single week. Again, quick way to calculate this is take the 5,200 you need to make annually, divided by the dividend yield, which is almost 12%, and you'll see we roughly get about 43, almost 44,000. So that is the calculations for this company. Let's go ahead and wrap up this video by looking at the dividend yield for this company. And if you can see dividend yield, you'll see that this is actually our dividend yield, and it'll continue to fluctuate depending on the current date. This also depends on the current share price. So 2019, you'll see that it was trading around 6 to 7% dividend yield starting, and during the pandemic it did spike up all the way to about 44%. Ridiculous here. Most of the companies did spike up there because we had a huge crash for a short term, and then it started actually going down, and that is because potentially the price of the company started moving upwards. But you'll see it's been fluctuating around 4 to 5% in 2022, and lately it has been going up, meaning probably the share price of this company has been going down. But yeah, this is around 10 to 11% is what you would have a starting yield. Let me know in the comment section if you do own this company. Why do you own it? Will you be a long-term shareholder of this company? And yeah, definitely would be interested. Let me know any other companies you want me to cover that you didn't see on the list. I'll be happy to add them, and we will eventually get to them. Don't forget to subscribe with that notification. We're trying to get to 20,000 subscribers, so definitely help me out. As well, drop a big thumbs up on the video. Definitely would appreciate it. I will talk to you guys later. Take care. Stay safe out there. Bye, guys.